on the panel, we have folks that are kind of on the commercial side of things. Certainly, Shapeshift is, I'd say, a consumer forward-facing business that is taking crypto into America's heartland. You know, it's come along after the initial burst. And also on the panel, we have Roger Ver and Charles, and you guys are more of the initial kind of first wave of Bitcoin, and going back to the you go back to 2009, I think.
Not quite that early.
2010.
He was trying to out you as Satoshi.
Right, we're trying to out you. In the first wave, you know the Bitcoin Jesus. You don't get that moniker unless you're early. You get the early. So I guess the topic of contraction or expansion. So we'll start with Roger. So on the kind of the big picture, if you will, without talking about specific companies per se, but the mission, the vision, the Satoshi vision, is it expanding? Is it contracting? Your thoughts?
So without getting into the scaling debate, cryptocurrencies as a whole obviously are expanding. It's going crazy. And here we are at one of the most prestigious event centers in the entire country where some really high power events have taken place. We're here at the Aspen Institute talking about cryptocurrencies. That's a sign that this is really catching on mainstream. It's being adopted all over the world. It's not guaranteed that it's going to be Bitcoin in the end, but cryptocurrencies are here to stay. They're not going anywhere, and it's only going to get bigger and bigger and more popular from here on out.
Okay, quick add-on. So when you see a state actor like China looking like they're trying to ban Bitcoin, et cetera, is that a factor going forward, or are they barking up the wrong tree?
That's probably a signal that we should buy more, because China has already banned YouTube, they've banned Google, they've banned Facebook, they've banned Twitter, and if you had invested in any of those things early on, you would have done very, very well.
Fair enough. Good point. All right, so Charles, walk us through a little bit. You definitely, I heard your talk yesterday. A great overview of Bitcoin, where we are, where we've been, where we're going. So give us your look down through 60,000 feet. Where are we going to be in 5 years with the crypto space and Bitcoin space? Where are we headed?
Okay. So the short answer is I don't know. But I can speculate like everybody else. When I got into the space, it was I got in academically. I created a class and I taught people about Bitcoin. And then later on in 2013, I got in professionally. Since those early days that Roger and I were in, the growth has been astronomical. It's gone from, anytime somebody mentioned something, it would be front page on Bitcoin Reddit. It would be a huge thread in Bitcoin Talk. Like very trivial things to it's like global phenomena, right? So the question is it going to continue to grow? In what ways is it going to grow? Who are the leaders going to be? And I think honestly, the question is, how will this technology actually impact society as a whole? And this is actually where we're going. We're starting to already see dramatic changes in the way banks think. We're starting to already see innovation across every piece of the financial stack. We're starting to see big discussions about identity. So if I had to guess, where are we going to go in 3 to 5 years? I think we could go to a password-free internet. I think we can go to a very decentralized way of handling domain names. I think we can talk about putting credentials on a blockchain, breaking up the educational monopoly. We can talk about instantaneous flow of value to countries that really have a difficult time with the current banking stack. Now, the question is who's going to be the winner and loser. I just don't know. But I do know this technology is not only here to stay, that the investments are increasing by an order of magnitude every single year. We've seen it go from hundreds of thousands to millions to tens of millions to hundreds of millions to billions of dollars flowing into this space in just a matter of 5.5 years, which is extraordinary. So I believe that that's probably the way to look at it, is to say, are these trends going to continue? And then what industries are going to get disrupted or changed?
Okay, a follow-up to this, and I'm going to go back to Roger for his comment, and then we'll work our way down the line here. So you were a co-founder of Ethereum, and Ethereum went through a split. Right. And we have Ethereum Classic, and we have Ethereum. And it seemed by most observers to go down fairly without too much drama. And of course, in the case Roger mentioned the scaling debate. In the case of Bitcoin, there's been a lot of drama around this issue. Why do you think that in Ethereum's case we saw very little drama, and why do you see so much in Bitcoin in your opinion?
That's a really good question. So in the case of Ethereum, it was over a particular event and most of the founding core stayed with the original chain, and a small minority branched off. Basically there was just a brewing malcontent with many decisions that had been made, and so people decided, hey, let's go and choose a different route. In the case of Bitcoin, there's no clear leader. There's no Vitalik Buterin, the one we had left a long time ago. And as a consequence, we just had a lot of camps, very powerful, very well capitalized camps who have a great degree of influence and control. And these camps just couldn't quite find a way to work together well for a variety of reasons. And so they tried very hard, but at the end of the day, it seemed like the divorce had to happen. And unfortunately, it was a pretty messy divorce.
I want to bring in Roger Ver on this because he gave an interesting answer to that question last night about why you thought the Ethereum blockchain had less drama.
Well, I guess part of it is that the difficulty for mining Ethereum adjusts after every single block, whereas with Bitcoin, it's after every 2016 blocks. And the hardware that's used for mining Ethereum are graphics cards that people have all over the world, whereas with Bitcoin, it's very specialized hardware. And I think that there's a lot of fear between the SegWit version of Bitcoin, that if the Bitcoin Cash version of Bitcoin takes enough of the hash rate away from it, it'll really start to cause problems with the SegWit version of Bitcoin. So I think that makes the infighting, the animosity just that much more rough. But from my point of view, I wish the divorce had happened several years ago, and I think the entire ecosystem would be much farther ahead than we are today.
Okay, fair enough. So let's move down to the panel line here. So as I try to break this up a little bit, so these guys are kind of looking at the big picture, the philosophical picture a little bit, and you guys are actually kind of in the day-to-day, certainly Shapeshift has customers every single day, Zen, Cash. So what's your experience been just dealing with this on the front line of, you're in the crypto business, it's a brand new business. What are your experiences? What are your challenges? Is this expanding, contracting? What are your thoughts?
Hi, my name is Arry again, new kid on the block. So for us, our company is called Storm. We're building Storm Market. And what we're doing is a gamified microtask marketplace. The lingo is earn anywhere, anytime, from any device. And so our perspective and point of view is really around user experience and design. The technology has been around a little bit. There's definitely going to be a lot more improvements to it. But the way you really democratize access to any sort of technology is really on the front end, the user experience, how you talk about it, how you visualize it, and making sure that there's enough research and enough experts on that front is really important to us.
Next.
Yeah, so at Shapeshift, I think it's very clear to us that the crypto industry is expanding and expanding very quickly. 3.5 years ago when we started Shapeshift, we had this thesis that the majority of assets in the world would be digitized and that people would want to trade between those digital assets. At the time, many people, including investors that we were trying to get on board, with the exception of someone like Roger, who was nice enough to invest very early on, really thought we were crazy. Even people in the Bitcoin industry didn't really see it. They thought Bitcoin would be the only real digital asset and that nothing else would matter. Over the last kind of year and a half, especially with the rise of token sales and Ethereum and a number of other assets, and it becoming easier to digitize assets, I think our thesis has been proven very correct. And we've seen even some of the older Bitcoin players, such as Coinbase and some of the people who've been around a lot longer, start to move that direction as well, because I think they see the writing on the wall. In our case, Shapeshift has grown tremendously every year of its existence, but especially over the last year and even just the last 6 months. And we just see things expanding in every direction, and it's very hard to keep up. One of our biggest challenges is dealing with the fact that a lot of the software that we have to run in order to make our system work is often what I would say nothing better than like a very advanced alpha, if I'm being generous. A lot of the software is not even that good, and even Bitcoin, the core Bitcoin software, is almost never tested at scale by the actual developers. They don't see the kind of transaction volumes that we do. They don't see the kind of throughput that we do. And so often we're talking with all these various communities to help them improve their software because we have no choice. It's the only way to make it work. So in our sense, there's a lot of challenges and a lot of technical, kind of hurdles that are going to need to be overcome. But we think those will be overcome, and it's just going to continue to expand.
Okay, so you said that in the case of, let's say, Coinbase, they are now moving more toward expanding and incorporating other cryptocurrencies, which is slightly different than, let's say, the original mission statement was very Bitcoin specific, and there's this meme of the Bitcoin maximalist, and that all others are, pretenders, et cetera. But you're seeing at Shapeshift, and in your observation of the industry, is that this multi-crypto world is emerging, and everyone is kind of getting on the boat here. That Bitcoin is just one of many cryptos.
Yes, absolutely. I would say that a lot of the people who are these quote unquote Bitcoin maximalists, their original vision is that there should only be one type of money or one really good money, and that it doesn't make sense to necessarily have competing types of money, that kind of detracts from its value. And in some ways, there's an argument there that makes sense. But I think what was missed is that money is obviously not the only type of important asset. We see in the legacy financial system, there's thousands and thousands of different types of financial assets. And it's not going to be any different in the crypto world. There's no reason that the majority of these assets should not be digitized, and there's no reason that a blockchain is probably not the best way to do that, at least of what we have of current technology. So yeah, what we see is just assets expanding in every direction, and there's no reason that there's only going to be one of these things. In fact, it's inevitable. There's going to be thousands or millions of them.
Let's hear from Zencash.
Yeah, no, so I would say the cat's out of the bag, and we're at the start of a big revolution that's definitely not going to go away. So we see this all the time where, it's the difference between a controlled system where you have one monopolist that can do everything that it wants, completely unresponsive to its customers, or you have a fully competitive system that could constantly expand, iterate, innovate, in a permissionless fashion. I think the difference between the two is uncategorically better when you have full competition versus a monopolist. I couldn't think of any industry where it would make sense for a monopolist to be the best or optimal solution for any solution set. So what we're seeing here is we're just seeing this massive, rapid explosion of innovation where things are happening in real time. And in our market, what I think is really interesting is, so this industry has been dominated basically by US and European, developers and early entrepreneurs that kind of got out there up front. But now we're seeing growth, enormous growth overseas in different regions. And that's actually what we're trying to do. So we have actually our CIS, our Eastern Europe and Russia lead here right now. So we're growing explosively in parts of the world where the other cryptocurrency projects may not have initially been focusing. But these people in these regions that we always talk about as being great use cases for what we're doing, we're actually going out there, and I think that they're very motivated to get into this revolution.
I have a question regarding, speaking of explosive growth of initial coin offerings, ICOs. There's been a huge expansion. I get emails like 50 a day saying, oh, we have this new ICO coming out. I wanted to ask Charles Hoskinson first, because he's a cryptographer, so he knows whether or not there's actually any point in many of these so-called tokens, and whether or not the SEC, which has now made a ruling on that, is saying that these are, you can call them tokens, but many of them are securities. Also, China's clamping down on it. Do you see any necessity for most of these, and do you think this industry of the ICO market will be hit hard soon?
Right, that's a really good question. So first, we remember when color came to movies. Was it The Wizard of Oz? A few of them. And a lot of filmmakers didn't actually know how to use color. Things were a bit too vibrant. People would throw up. The same for 3D. Anybody been to a 3D movie where it was a little overdone? Maybe at least one of you. And it's the same thing here. ICOs are a neutral thing. They're a tool that one can use to provide liquidity. It's like the ultimate crowd sale. Now, like all tools, you can use them to do great good or great evil. And now that people realize that they can raise tens of millions of dollars without asking anyone's permission or going through any particular channel, they're doing it. I went to an ICO summit recently in Switzerland. It was actually just last week, and I found out there's 200 active ICOs going on this month. I don't even know where the hell they all are. It's pretty crazy. When China shut down the ICO industry, I found out there were 60 platforms running ICOs with several hundred ICOs that had already happened. So to answer your question more specifically, you asked about the regulatory implications. I think it's a facts and circumstances argument, as the SEC made evident with their DAO ruling. And if the token has no utility and there's no natural demand for the token outside of speculation, then it's probably a security. The ultimate test you can use, the armchair test, is remove the company that's raising the money. Is the protocol still there? If Vitalik Buterin was to die in a plane crash and the Ethereum Foundation was to go away, Ethereum would still be here, as would Bitcoin if Coinbase went down. But if you look at a lot of these things, if you remove the central company, the protocol dies. It probably is a security in that sense. Now, your final question was on, are these necessary or not? And unfortunately, I think the vast majority that are occurring are just existing or kind of far-fetched business models that haven't gone through peer review or due diligence. And the reality is, no, they're not necessary, and they will result in failure. But to be frank, this is how venture capital works. We're just exposing the risks and hazards of venture capital now to a larger group of people. The reality is, if you're Kleiner Perkins, you will see hundreds and hundreds and hundreds of business plans that are batshit insane. And unfortunately, you will see hundreds and hundreds of ventures you funded, which in hindsight turn out to be batshit insane, a la pets.com. And that's just basically where we are as an industry. It's just the risk is now being pushed upon a less and less affluent group and a larger group of potential speculators.
So you mentioned the VCs there. Are ICOs now going to disrupt the VC business?
Well, we got a VC right here. I mean, Roger, has it disrupted your business at all?
Yeah. So we've seen Bitcoin and cryptocurrencies disrupt, banks and PayPal and things like that. Of course, ICOs are disrupting venture capital. And in fact, I think just recently, the total amount of money being invested in new businesses due to ICOs surpassed the amount that's being invested due to legacy venture capital firms. So that's a really, really incredible turning point. One of the downsides of that is it fills up all of our inboxes every day with 1,000,001 people with their new ICO.
It's impossible to tell the difference between any of them. When it was just like 5 a month or something, it was easy. Now it's like 5 a day or an hour, and you're just like, oh my God, half of these have to be scams. But what about China in terms of these ICOs? This is the first they really clamped down, is stopping the ICOs. How much liquidity were Chinese investors? I know Chinese investors are famously very they're not risk averse, let's say. They're very gung-ho on any investment. So what sort of liquidity were they providing to the market? And are we going to see Bobby Lee hanged?
Hopefully we will not see anybody hanged in China for being involved in the space. But I'm a little bit jet lagged at the moment because I just flew in from Hong Kong and arrived yesterday morning from a big conference that took place in Hong Kong that was supposed to take place a week earlier in Beijing. But they had to cancel the entire conference and move it to Hong Kong from Beijing because of the regulators there. And so there were a bunch of these Chinese businessmen that are running Bitcoin exchanges and cryptocurrency exchanges and are involved in all of that. The big talk at the conference was they were talking about how quickly they can move to a country other than China so they can continue doing what they're doing. And I think a lot of them will do exactly that. So it might slow it down a little bit within China, but this is a worldwide phenomenon and anybody can participate. And the entire point is that this enables permissionless innovation, meaning you don't need the permission of people in Beijing that you've never met, nor for the permission from people in Washington, D.C. that you've never met. So that's the entire point of what we're up to here. We're about permissionless innovation, permissionless payments, permissionless freedom.
And I want to follow up with Shapeshift and the exchanges here regarding ICOs and this ruling from the SEC or the paper they issued saying that many of these are securities. What sort of is that forcing you into doing more due diligence and compliance? And what is your role in offering these tokens on your platforms?
Yeah, great question. So I do think that the SEC announcement was a bit of what we call, a shot across the bow. It was a bit of a warning sign to the industry. But at the same time, anyone who's been in the industry, especially on the exchange side and been paying attention, it didn't really contain a lot of news in it. It was not a surprise that the SEC thought some tokens were potentially securities. And it wasn't particularly a surprise that the DAO in particular would thought to be a security because it had all sorts of elements of a security, such as voting rights, potential profit sharing, all these sort of things the SEC looks at to determine whether it's a security. An important thing in the SEC ruling, I think, is that they did not say that all tokens blanketly are securities. They were very clear to not say that. So they actually left the door wide open that there are many tokens out there, if structured in a certain way, that may be, a utility token or may not be a security at all. I do think it's causing a lot of exchanges, including ourselves, to take more of a fine-tooth comb to which tokens and assets we're willing to list, being very careful not to list ones that we think will be considered a security. Especially the large order book exchanges. I talk to a lot of them all the time, and they are all certainly being a lot more cautious than they were before. But then again, it's really important to repeat that anyone who's been paying attention, it wasn't a big piece of news. None of us were surprised that the SEC made that ruling, and it didn't really change any of our business models because we were never trying to list tokens that were a security in the first place.
Okay, so with Shapeshift, of course, because of BitLicense in New York, you guys moved jurisdictions, correct?
So, all we did is Shapeshift is a worldwide entity. We serve everybody in the world, and we're a very global company. All we did is we blocked the jurisdiction of New York when they passed the BitLicense. We were never based there, but we can't serve customers there, and we don't believe they should with the kind of onerous reporting requirements they have. And honestly, we helped put up a website right when that happened called pleaseprotectconsumers.com that kind of was used as an industry example of why we don't think these things are a good idea. And I think we've just been proven right time and time again ever since then. The most recent example being the Equifax hack of why these giant institutions should not be holding these treasure troves of data. It's not a good thing, and it's just a honeypot for hackers to come and get it. The best defense against hackers is to not hold the data in the first place.
May I comment? So we're a company that's actually planning and in the midst of launching a crowd sale. We haven't announced a date yet, and we're actually dealing with a lot of the unknowns in the space. Are you security? Are you not a security? What do you think about the regulators? We're working with various lawyers of all different kinds, and yes, we are based out of the United States. And so we have to be very conscious of that. But I'd like to take the conversation up a level and go into conceptual. Conceptually, I think we all just have to take a moment and say, let's just use common sense. The VC world has already set best practices of what is a good company and what is likely to not be a good company, right? They generally, I've been working out of 500 startups in San Francisco for many years. This isn't our first rodeo. And so very often an investor, and I've been an angel myself, you go, do I believe in the team? What is the intrinsic motivation on why they exist? Are they solving a real problem? And does this problem need to be solved? Do people want this solved? Right? Like basic human questions need to be asked more than, is this a speculative effort and am I going to make a ton of money? Like that's not the question we want you to think about. You need to think about human-centered fundamentals. And this is where we really believe we're solving a big problem. If you look at today's payment systems, it's not built for microtransactions. I hear the conversation over and over again just sitting in the cafeteria here, or the tent. The unbanked, that's a very popular term that people are talking about. But what does the unbanked mean? It means there's a whole set of people, like human beings, that don't have access to resources.
Yeah, right on.
They're kind of lucky they're unbanked if they're here in the U.S. because everybody was hacked by Equifax. So
That too.
Exactly.
And I'd like to actually point out that I think one of the main points of cryptocurrency and Bitcoin specifically, and why I got involved, is to unbank the banked. The entire point is to make it so that we don't need bank accounts anymore. So let's unbank the banked.
that's really good. So now, speaking of the bank, the biggest in America is JP Morgan. You know what question's coming about this, right? JP Morgan. Jamie Dimon has been floated often as a possible Treasury Secretary or, president they're actually saying that he could run as president. He's doubling down again today. I guess he said Bitcoin is a fraud. His name, he has, he's connected. He can speak to people, and if obviously he feels this is a competition. Do you think the likes of, I'll ask Roger first because he's the closest, and I could just hand the microphone to you. Do you think he could have some role in making things difficult for American companies involved with Bitcoin?
I think Jamie Dimon doesn't understand Bitcoin and what it's about. And I'm more than happy, Jamie, I'll be your private tutor and I'll teach you all about everything. I'll donate my time to do that. And once you understand what this is all about, you will want to get involved in a big, big way, because you'll understand that this is one of the most important inventions in the entire history of humankind, right up there on par with how important it was with the invention of electricity or the internet itself. That's how important the invention of Bitcoin was, and the distributed ledger technologies that it's enabled since then. So Jamie, I'll be your private tutor.
That's a good offer. He should take him up on that. Now I'm going to pass it to Charles, because Charles, Jamie Dimon, JP Morgan, all these banks, Goldman Sachs were involved in trying to develop their own blockchain. Do you think the process of his bank going through that he really understood how much of a threat blockchain and Bitcoin and cryptocurrencies are to their business model?
First with respect to asking a banker about whether they like Bitcoin or not, that's kind of like asking a king, do you like democracy? I mean, if you think about it. These first $13 billion in fines or something like that under his reign, the guy's a tapeworm.
Now, time for Max's impression.
But no, I mean, I honestly, it's just so thoroughly frustrating and insulting when people who know very little about what we do watch an up-and-coming technology and have the audacity to call us all criminals. We're not the criminals here. The whole damn reason this ecosystem exists is because they're the criminals. And, it doesn't really matter at this point what he thinks. The genie's out of the bottle. Somebody in this room or somebody at this conference or somebody around the world is going to solve the problem of decentralized lending and value-stable currencies and decentralized exchange. And within 5 to 10 years, banks will become less and less relevant, just like landline telephones are becoming less and less relevant. And we're going to wake up one day and we're going to be in charge of our own money. And Jamie Dimon, in retirement, can watch the world as it is, not the world as he would like it to be.
I'll say I think he said that to get attention, first of all. But I'll go to the other point of your question was, what can he do to stop this? Or maybe not him in particular, but the type of hierarchy that he might represent in a lot of people's minds. Yes, they can actually cause a lot of pain across the board. So it's something that we have to just be realistic about. As we go forward, I think we need to keep that in mind and make sure that we self-regulate on a number of fronts, and we try to do things very much in the open and just try to be really good examples of good human beings who are doing the right thing from the start, rather than have, in retrospect, people come down on us for doing things that, they can point to us and say, aha, I told you all along these guys are a bunch of criminals. Like, we need to show that we're the exact opposite.
Yeah, so I would say on this topic, when you see someone like Jamie Dimon calling Bitcoin a fraud, or you see China coming down hard on Bitcoin, these are very good signs for the industry. This means that they see this technology as an actual real threat. Do you think they would waste their time saying these things if they didn't actually think it was a threat to their own businesses and, their own control over, monetary policy and the world as a whole? I don't think they would. I think the fact that it's getting more attention and that they're starting to speak up about these things is a natural part of the pushback that comes with a disruptive technology like this. You wouldn't see in this, but it's almost like watching, the U.S. Post Office back when the internet and email was first starting to come out, saying, "Oh, email is a fraud. This is completely ridiculous. It doesn't have a stamp. You don't send it in the mail. It gets there instantly. This cannot possibly be anything but a fraud." That's what I feel like when I see Jamie Dimon calling Bitcoin a fraud. And just like email started to proliferate and obviously became a much more useful tool than the post office, Bitcoin and cryptocurrency and decentralized assets, token sales, all these various things that the industry is begetting, they're going to be much more useful than any of the other legacy systems, and that's why you have this kind of pushback.
Change is hard. It's hard for humans, no matter who you are or where you are, right? I have to go with the humanistic answer here. And but we can do something about it as a community, like each one of us in this room, to make change easier for our neighbors, our friends, our bankers. I mean, we all have relationships. It's literally educating people. Education is the greatest, I guess, power battle weapon against fear. Educate our friends, our neighbors, our family members, the people that we work with, and that's the best we can do together.
That's good. I'm going to, Max and I are audience facing, so we hear back from all sorts of people around the world when we talk about Bitcoin. So I'll present you with some of their arguments and you could address it. I already pretty much know how you're going to address it, but there's this one notion. So we had a hurricane and all the electricity was out. And people wrote to us, what good is my Bitcoin now? Huh? So if there's electricity goes out or an EMP or something like that, they always say that the whole electric grid could be knocked off and apparently never brought back online. That the government might shut down the internet and then what would your Bitcoin be worth? So there are these sort of arguments. And I know, like, everybody here is quite advanced in Bitcoin, and it seems silly, but those questions are out there, and from ordinary investors and citizens and residents. So, what do you say to that?
If you think that your bank account or your credit card or your PayPal account or any of those things are going to work when the internet is offline or electricity is offline, you're being naive. So, of course, those things aren't going to work either. So, same problem. The world's in big trouble if the entire world's electricity and internet is offline. You have bigger problems to worry about than your Bitcoin wallet not being accessible.
Anybody else have anything to add on that?
Yeah, I mean, just kind of adding on what Roger just said, I think these are arguments made by people who think that when they deposit, $50,000 into their bank account, that their bank is actually holding 50,000 $1 bills or something crazy like that in a bank vault, just waiting for them. Just, it's just there. When in the reality is the majority of money and asset value is already electronic. The reality is Bitcoin and things that are can be cryptographically derived. The fact that you can actually keep your crypto assets on a paper wallet, you can have a seed and something that you could always derive later. That's going to be much more secure than these centralized databases that get destroyed. And you see all the wealth of the world destroyed if all of the electricity went off. In fact, crypto at that point, when people could start getting generators or little bits of electricity, would be one of the only assets you could actually recover. You're not going to recover from the centralized databases that all their backups are destroyed of.
Okay. Oh, I was going to move on from that because that's actually a lot of the people who say this are gold or silver investors, and they say I can hold my silver, bury it in the backyard. Yeah. We're going to be debating Schiff about this at 4:00, I believe. But what do you say about? We'll talk down to the consumer-facing guys down here. Is that Bitcoin is the gold for the millennial generation. It's a safe haven asset for the millennial generation. Do you see this? Do you believe it's true? And what do you say to people who say, like, it's never going to be gold, it's not money?
Sure. No, I can speak to this as a financial economist, actually. And I think that people should stop looking at the world in a binary fashion where you have to believe in Bitcoin 100% in order to start getting some. I think that's kind of silly. So these, and even piggybacking on the last question about the EMP, yeah, I mean, sure, that's a massive issue if something like that were to happen, but you don't put your entire life savings into piles of gold in your house, So just rationally diversify. So the same thing is said for this whole store value case and kind of digital gold for millennials. Absolutely. I think it should be. It's cross-border. It's easier to use than gold, whatnot. But also buy some gold, buy some silver. It doesn't have to be one or the other. So I really don't understand these debates between gold bugs and us and crypto. It's, I love gold too. So I think we should all just get everything.
Yeah, I mean, I think many gold bugs are a little bit angry that they didn't invest in Bitcoin 4 years ago. And I've talked to quite a few who wish they had because gold has remained relatively flat during that time. And Bitcoin is obviously, not. So I think that the younger generation, millennials, et cetera, they have more of a natural affinity for this stuff. They've actually grown up kind of using variations of digital assets. Anyone who's played something, like an MMO, World of Warcraft, or, these video game industries where there's already virtual economies that have existed for, 10, 15 years. And they've seen this and they understand that it has actual value, and they just don't have this kind of skepticism that, maybe other generations do, who are looking at things like gold and silver and think, well, they're kind of using this argument from induction, what I would call it, and which is it's always been this way and therefore it'll always be that way. And that's always a good argument until it's not, until the rules change. And I think some people are starting to realize that the rules are starting to change and that argument's not going to hold that much water that much longer.
I mean, just reiterating, millennials, we already live in this world. The world is just catching up to the way we see it. And so as gamers, yes, we've earned tokens and coins and stamina points. It's awesome. And we grew up with Facebook. We've all grew up with iPads from the age of 5 and on. This is normal for us. And so and what we value is a little bit different, right? The way we shop, the way we interact, what we like to spend our time and money on is also different. We really believe in social networks and reputation and exchanging ideas and experiences. And really, going to a fully digital, crypto-enabled world is an amazing experience. And I think we can all embrace that.
Yeah, cool. Maybe a few questions from the audience? Yes, sir?
So let's say in the event of a financial crisis like we experienced back in 2008, 2009, when people were liquidating their stocks, bonds, basically we saw asset values, stocks, bonds, real estate, pretty much across the board fall in relation to the fiat currency. Fiat currency like the dollar and euro. How do you think Bitcoin and some of the other top cryptocurrencies will react in that kind of environment, because inevitably that's coming at some point. We'll have another recession correction. And what's your theory behind that?
So if you look at thank you. If you look at the election of Donald Trump, what happened to Bitcoin right after he was elected? It went up, right? And did people believe that Trump was going to be stable for the markets or potentially a bit volatile? So I think Bitcoin is becoming a contrarian view of the nation state or the stability of the world. So when chaos and crisis emerge, we tend to see things like gold and Bitcoin go up.
So do we see any statistics for that, let's say over the last year or two? I mean, we've had movements in the financial markets, we've had stock corrections and things like that. Is there any correlation that you can point to that says when the stock market went down, the Bitcoin price went up or anything like that?
I have anecdotal evidence, but actually I think Rob would be the only guy who could tell us about this. This is what he does.
Sure. I want to believe that Bitcoin's negatively correlated to these other things. The reality is, mathematically, there's zero correlation. But that's also a beautiful thing for a portfolio, right? You want zero correlating assets. So we haven't seen Bitcoin largely adopted yet during a major financial crisis. But one thing that I can say is a lot of other financial assets, they're very opaque, interconnected webs of levered instruments that no one really knows who the other counterparties are. We don't exactly have that. Bitcoin is largely an equity-based type of asset. So I don't imagine it to have those kinds of cascading runs.
Yeah, I'll just add, I don't think we've seen it as much in this country yet, mostly because even despite 2008 and the financial crisis, the dollar has still remained relatively stable compared to most world currencies. But if you look at some other countries, such as places like Venezuela, where they have runaway inflation, they have naturally started to move to other stores of value like Bitcoin because they know the government can't just take it from them or hyperinflate it on them. And I think any country that's dealt with those kind of economic problems, they understand the possibilities and the opportunity of Bitcoin and crypto much quicker than we do here in this country.
Question? Yes.
Do you ever see any price stability coming into Bitcoin? You think it always is going to be on this constant uptrend and float? I know it's a hard question to answer, but you sit back and be saying it's going to go to 500,000.
Has gold ever stabilized?
You don't think it'll ever stabilize?
Probably not. Constant supply, non-constant demand.
My feeling is that as you get into the higher prices, the absolute nominal dollar changes on a percentage basis diminish. So with Bitcoin at 100,000 a Bitcoin, the 1%, 2% move might look great, but it's on a percentage basis a lot less. So it's only because it's on these lower prices that you see these gap moves. I've seen I think 4 or maybe 5 crashes of 60, 70, 80% already, but they're getting less. So this recent move from 5,000 to 3,000, it looks scary, but on the history of Bitcoin, this ain't nothing. This ain't nothing.
I want to say we got some death threats on back in 2011. I put all my savings into Bitcoin and now it's $7. I bought at 14. How dare you talk about it? And it's like, so it's all, it is a very volatile currency but I assume it will get less and less so as it's wider and wider adoption. And, back in those days, people were a little bit less sure about what the heck this actually was. And there were more thefts, by the way, of Bitcoin. I think it's getting a little bit safer and more secure, a lot of the sites, but back then everything got hacked. I think you probably had $1 billion worth eventually stolen. But it's just like, I think it's getting more secure, right? Hopefully.
We hope.
Yeah, I mean, the actual protocol of Bitcoin has not ever really been insecure and has never been hacked or anything like that. What you've always had is the centralized entities, and obviously over time, as the industry grows, those entities get better at protecting their assets, or things like hardware wallets start to proliferate, or other ways to have cold storage. So there is absolutely safe ways to keep this, and that will just keep getting better. And on the volatility subject, I think much like Max said, I think the reason it seems so volatile is just because the market cap is so small. I mean, we look at crypto right now and we see, $130, $150 billion market cap, and we're like, wow, that's so much larger than it used to be. But anyone who pays attention to, the world's financial picture knows that's still a tiny, tiny little drop in the bucket. There's much larger asset classes out there that dwarf this industry, and as it continues to grow, it will inevitably stabilize. You won't see the same percentage swings that you see now when you have a much larger market cap.
Yeah, just to put it into context, I believe Apple has $250 billion in cash on their balance sheet just sitting there. So they could buy up every single crypto out there and all the tokens.
Yes, exactly. Although if they tried to, of course, the price would run away to the moon.
Any more questions? This guy, Michael Parsons.
I'd like to make one comment about the Bitcoin price and its future value. If you consider how many millionaires are there in the world, are there more than 21 million? There are, definitely. How many Bitcoins will there be eventually? Probably less than 21 million, or 21 maximum. So if each millionaire wanted to buy one Bitcoin per millionaire, what would the price be? And that isn't counting all the other institutions and all the other retail investors. So that's my view on the price of Bitcoin.
Has anybody ever done a study of actually how many Bitcoin are lost forever? The private key gone?
I think it's somewhere around 5%.
5%.
1 million.
Yeah.
1 million plus.
Yeah.
I hope I find those keys one day. That was a terrible, terrible day. I meant to get my blue hat, but I picked up my red hat. That had the key in it, and no, terrible. Question in the back.
So Ledger is bringing Bitcoin options, SEC-approved options to the stock exchange come October. How do you guys see that affecting the market?
CFTC approved.
I'm sorry?
Not SEC, CFTC approved for LedgerX, right?
Correct.
Yeah.
Okay.
Well, it'll manage volatility, and it'll give institutional investors something to play with.
Okay, so the question was they're launching futures products later on by CFTC is doing so.
Yeah.
How will that affect the market?
Yeah, Bitcoin itself, yeah.
Yeah, it'll give some depth to the market. It'll also give potentially tools of malcontents like a Jamie Dimon to play around with the market. One of the reasons Jamie's so vocal is because, ordinarily he could just go into the marketplace and very quietly move prices around, as we see in the precious metals sector. Obviously, it's been irrefutably proven. But because he doesn't have these tools, he has to, appeal to the press and just stomp around like a 2-year-old, because he doesn't have those tools to deal with. And that shows you that we don't have them. Now, it would give some depth to the market, but it's a double-edged sword in my view. It gives, it opens up room for abuse from the same people that abuse the market today. But it's kind of a race to see whether adoption and the Bitcoin ethos can replace the fiat currency and the fiat ethos. Because in America, we now believe that in America, fraud is an acceptable business model, thanks to Wall Street. So, I mean, crypto hopefully will re-educate and bring in something new, I think. Hopefully.
The guy in red?
Yeah, please. Back to Jamie Dimon for a sec. So he actually said that the governments would shut it down if it got too big, the crypto space. So what if the governments of the world really do like a coordinated effort and just shut down the whole space, like the Coinbases and all the exchanges, and prevent us from actually buying and selling these cryptos? What would happen then?
So how good of a job did they do shutting down file sharing? And what country is IP theft legal? It's not. If they try to shut it down, the technology just gets better, and we get better and better at avoiding them. And so currencies will get more anonymous. It'll become harder to know who owns what where. Decentralized exchanges will get significantly more advanced. The other thing is that governments won't coordinate in this respect. So is there a universal tax code throughout the whole world, or are there tax havens? So there's always going to be governments like Switzerland and others who are going to be very pro-crypto in certain respect. And so if some government shuts it down, there's a mass exodus of people to another jurisdiction. Going to China, for example, the very first thing people started asking about when the China ban came down is, how do we move money to Hong Kong or to Singapore or to similar jurisdictions? So I just don't think the event's going to occur. And if it does occur in a limited capacity, we'll just see a massive investment into decentralization.
Pass to you. Yeah, I would argue that it's basically already too late for that to happen. If governments had, started to put this kind of action, 4 or 5 years ago, they might have been able to have more of an effect. But it's just grown too fast. And it's pretty much exactly what Charles just said. You can't get the governments of the world to agree on anything. You're absolutely not going to get them to all agree to ban crypto at the same time. And for every jurisdiction that takes draconian measures, there'll be another jurisdiction that sees opportunity and invites the businesses and the opportunity to come there. In fact, we even see this just within the United States itself. The United States is kind of this laboratory of democracy, at least it likes to claim it is. And you do see this, that the states have different approaches. So, you get New York with the bit license, who tries to clamp things down and put onerous regulations. And then you have Delaware, not in more than a month or two later say, hey, you all can come here. We're not going to put these regulations on you. Start your companies here. And you'll see this on a global scale more and more. Every country that knocks it down, another one will see it as an opportunity.
Yeah, I just want to quickly add, that said, I completely agree with you guys, but we shouldn't discount the harm that they can actually do to real people. So that's the dark side of it, right? They can't kill the industry, but they could hurt a lot of people, which, in some selective cases, they already have.
Yes, sir.
So, do you think Jamie Dimon did what he did to get a better entry point into Bitcoin?
They're already in, man.
Is it a bullish signal? Is the question.
Probably.
I do know for a fact that his London traders, remember he said in his statement that he would fire anybody who trades Bitcoin in his desk. I do know for a fact that somebody developed an app for JP Morgan traders specifically back in 2013 to trade Bitcoin. And I guess that some of these engineers and code writers over here would understand this better, but I believe they made it in XLS or something like that because their actual browser was being monitored by their bosses. So they were trading Bitcoin, and there was a special exception for Max Keiser because their algorithm was trading off Bitcoin mentions on Twitter. And at that time in 2013, it wasn't a big story. Nobody really big and no media was covering it. And anytime Max would tweet about Bitcoin, the price would go berserk, and they would have to leave their trading desk at JP Morgan and go over and shut down their app that had been developed. So I know they had a sophisticated app developed that couldn't deal with Max Keiser.
Yes, sir.
So with Bitcoin, when we get closer to the $21 million Bitcoin supply, and there's, the incentive starts to diminish, for miners, right? gets littler and eventually goes away? How do you see the network being managed at that point?
Well,
Roger's got an answer.
We have more than 100 years until that takes place, so that's a problem I think we can wait a couple of decades before we start worrying about. The general thought at the moment is that network fees will pick up the slack there, but again, that's about 120 years from now, so tons of time to worry about that later.
What will Bitcoin prices be by then?
21 million.
If we're still alive.
Right there, gentleman in glasses.
Purely on an investment side, as the industry grows, what type of sort of self-policing do you see as there seems to be a smaller amount of people who are making decisions in the crypto world, and there's about 6 or 7 people who are very influential in the recommendations, but they also run companies, they also own a lot of cryptos, and where does that become a rather dangerous line as it becomes more and more knowledge coming into it?
Well, and so this is the topic of governance, right? And so I think I can speak a little bit about Dash. Dash has an interesting model where you've got the master nodes who are weighing in on decisions about the protocol, and they have a vested interest in how it runs. And so they've come up with a governance solution in that ecosystem that addresses these problems. And I think these different coins are approaching these issues in similar ways by variations on the basic Bitcoin theme. So then it comes back to competition. So if it's a perception is that one group is becoming overly concentrated and making decisions that are not in the best interest of the network or the community, the dynamism of the economy is such that people can quickly move into other areas. The problem with authoritarian regimes in the physical space is that people are trapped. They can't leave countries. Freedom of movement is curtailed. But here, in this frictionless environment, you can move. And as the interoperability of all these chains become more of a reality, then you're going to see a lot of not necessarily price movement fluctuations, but migration of capital, not necessarily moving the price around, but moving the influence of different schemes around, if you will. So that's yet to come. You look in the sky and you see birds flying in those beautiful patterns, depending on what's happening. This could happen in the. Okay, I'm rambling now. Anyone else want to?
Who has more power, miners or the developers? This is an issue that's often raised. Like, the developers will complain that the miners have too much power, and the miners complain that the developers have too much power.
Well, it's pretty darn clear that all the developers are not of one singular mindset, and all of the miners are not of one singular mindset. And I guess that's one of Bitcoin and cryptocurrency's biggest strengths, and also one of its weaknesses, because there is no person you can go to and say, hey, make a decision. And even if, Vitalik with Ethereum, if he made some decision and the rest of the people didn't like it, it wouldn't happen. So we're going to kind of find out. There's 1,001 different cryptocurrencies out there, and a lot of them have different governance structures. It's a big, giant evolution of governance as well. So we'll find out.
I think I was also talking more about front running and the ability to purchase large positions and then to go on a social platform and really promote certain products as you've made purchases and coins that maybe are of minimal value, and then some very influential names kind of promote them. And you see almost daily something's up.
Well, that happens in the OTC markets all the time, and it's against the law, and you're likely to get in trouble.
There's a lot of things that have mimicked the equity world that have happened here, the internet, as you
because humans make up the equity world. Humans make up this world.
So you're saying you didn't buy the Floyd Mayweather ICO after he recommended it to you? Is that what you're telling me? I think it's like all things in life, just buyer beware. And if Floyd Mayweather tells you to buy his ICO, probably don't.
Yeah, I mean,
Blackburn or somebody that's a little more influential in the area than Floyd Mayweather.
But I think the point is that a lot of us in the industry think that the consumers should be making those decisions for themselves in the first place, and not a regulatory agency or a government saying, here are the rules, and you don't have enough money, you're not an accredited investor, you're not allowed to make these decisions because we don't trust you enough. We think consumers should do their own research, and they should make their own decisions. And if you see someone that's pumping something and you think that there's some nefarious activity there, you might be right. Don't be suspicious, be skeptical.
Question. Yes, sir.
So as I understand it, SegWit 2x discussion going on, which would further fracture the Bitcoin network. Yet you're all using the term Bitcoin as if it were one thing. What do you think is going to happen in November, apparently, and what will that do to the name of Bitcoin?
Well, Roger's already said publicly that it's going to fork. Charles, do you have anything to add about the Bitcoin fork?
What should we name it? Like Bitcoin Classic?
There's so many.
We can argue over the naming.
Can we sell the naming rights? Can we have an ICO for that? People need to start pulling their heads out of their asses and agreeing. It's not productive for the ecosystem to have these types of conversations. And I think that we need to learn that compromise is necessary. But I don't think it's going to happen. And I think we'll see more fracturing. And that's okay. That's why there's 1,000 altcoins. That's why there's tons of different standards. And we'll eventually figure it out over the long run.
Actually, I have a question about Ethereum. So when Ethereum first came out, there was this notion that there was going to be so much built on this blockchain.
By the way, we broke that on your show.
I know they broke it on Keiser report. I didn't get any ether, so I didn't. Yeah, exactly. So let me see. So ether. The notion was that there were going to be all these sort of things that could be put on the blockchain, all sorts of applications, and it seems to be just these ICOs at the moment. Is there any work going on?
No, I wouldn't say that.
Okay.
Okay, so far be it from me to justify Joe and Vitalik and all the things they've promoted, but we have seen a lot of good innovation and progress on the platform. For example, MakerDAO is trying to create or had tried to create a value stable token. We saw things like Golem, which is computation as a service, to try to create like an Uber for computation, so a decentralized marketplace for that. The whole notion of can you build good oracles in your system, this is being tackled by Augur and Gnosis, and it's pivotally necessary for a decentralized application ecosystem. Decentralized exchange is a very important topic because it immunizes us from the evils of the government. And Ethereum is a really good platform to experiment with these types of ideas. The problem is that Ethereum's capabilities aren't such that it can act as a drop-in replacement for Amazon or for Rackspace. It's just not capable enough as a platform from both the developer experience as well as from the infrastructure experience, as well as a cost experience. So it's perfectly legitimate to view Ethereum as a early stage project, and it requires another 5 or 10 years before we see the really, really good stuff evolving. But we're seeing it, slowly percolate, and most of these things will fail, but the ones that succeed will change the world.
And I forget who we had on as a guest, but they said that their notion was that Ethereum, the way it's built and all these things being put on top of it and ICOs, is actually there's a more incentive for the price to be lower. So the fact that the price is so high, does it have the same sort of built-in store of value, should it, as like Bitcoin has? Bitcoin, you can see, is a deflationary currency, is going to rise in value, but is the incentive for Ethereum actually to have a lower price so more stuff could happen?
Right. So that's a really good question as well. So the first question is, what are the economics of Ethereum with respect to infrastructure on top? So we always took the position that Ethereum is like oil. Bitcoin's kind of like gold, and Ether is the spiritual oil. So underneath the hood, Ethereum's like a giant computational engine. It's not a very efficient one, and it takes a lot of gas to run. But as you deploy more and more stuff, you increase the consumption of that gas. So arguably, the price of, if the supply is stable, the price ought to go up. As for ICOs causing problems, they cause problems in price in a very not such a good way. So let's say you're FooCoin and you go and raise $100 million on Ether. Okay, great. You have now all this Ether. Now, most of the people don't sell it instantly. They don't hedge. They just hold on to it. And sometimes the price goes up. But when the price starts falling rather dramatically, as we've seen a lot of volatility in the cryptocurrency space as veterans, what do? You panic because you have a fiduciary obligation to deliver the project, and now half your project capital's gone away. So you sell. Well, what is you selling $50 million worth of the asset? What does that do to the price? It pushes it down. So then there's another ICO that raised at a lower level, and they start selling, And then the next one, they start selling, and you have this kind of cascading failure in the price. And that can cause certainly a lot of problems. And because it's a mined currency, the miners also have the reserves, and they have a profit window as well. So when the price starts collapsing, they have to sell the reserves. So we haven't seen quite yet that cascading failure could happen, but that is one counter argument to saying ICOs are good for the price. The other thing is liquidity of value. So most people put money in these ICOs. A lot of them are early Ether investors. What does that mean? It means that that value is illiquid. It wasn't in the marketplace. It wasn't being traded. It was kind of locked up. And they got it at a very low price point. It's not new money entering Ether to pump up the price. So what you're doing is taking illiquid assets, and now you're making them liquid, which again would probably depress the price of Ether as well. So I think it's a fair assessment to say that ICOs can cause price depreciation.
Any more questions?
I think Rob and I disagree on that assessment.
Okay, good.
Rob.
Oh, if you guys want to.
What's
You can
up?
start, Roger.
Is there a mic down there?
Yes,
there
we're
is.
going.
Oh, so what? Why do you say that, Roger?
Like anything, if you have more people using it, the price is going to be higher. So all the people, maybe they buy Ethereum to participate in an ICO. They put in $100 million to buy all those Ether, and then maybe later on they sell it, but all that money came in first. So you can't sell more money
Yeah,
in Ether.
how do we know that it actually brought new people in, and it's not just a shell game where we're moving liquid assets to a liquid?
A portion of it would have been new people coming in, and if even a portion of it was, then the overall price for the ecosystem will be higher than it would have been before. So, but it definitely can cause lots of gyrations in the price. We completely agree on that part.
So this is actually really interesting. Like one of my earlier comments, I mentioned this whole cascading effect, and we probably don't see that as much in our space. But I do agree, Charles, that this is potentially a cascading risk that we haven't witnessed yet, but we might. So in the short term, sure, more demand for ICOs, more demand for Ether. You're going to see upward pressure on price, but we could have this longer term effect of in a declining market, we could start seeing. Particularly for these startups or these other companies that have raised capital, and they're seeing their capital that they have pegged to this other asset's price that has nothing to do with their project. They have a fiduciary responsibility to their investors. They're going to be forced to sell, right? So we could see cascades in the future. It's certainly a risk.
One small comment. But as the industry and companies get more and more practice, standards will be set, right? There are going to be best practices that come out. If you do a crowd sale and you raise a lot in Ether, these are the best practices so you don't cause havoc to the community. And so we'll see more and more of that. And if you are a company that wants to be more responsible than that, you'll go out into the community and ask for, what did you learn in your experience? What worked, what didn't work, and take from those and improve upon it, right?
So with this Ether question, though, if you are calling it the analog of oil, right? So oil industry tells us something. It has to be high enough to spur exploration, but not too high to dampen demand from consumers. Mm-hmm. So in that way, there's a sweet spot. Unlike, let's say, Bitcoin, which would be more like gold, or where a higher price is pretty much always welcome, right? So the ecosystem of Ether, there's a sweet spot, not too high, not too low.
Yeah,
that's different than Bitcoin, where people have a bias toward a higher price, and they would support that bias.
Right, and there's a collection of computations that are affordable to run for any price window. So right now, there's only a set of things at Ether we can afford to run, and the vast majority of things we can't. So as the engine gets more efficient, or we invent a whole bunch of new technology in the Ethereum ecosystem to allow us to shard or scale, then we can actually start walking into the conventional server space and so forth. But at the end of the day, you're absolutely right. There is an equilibrium point for any amount of demand and for any amount of infrastructure that's deployed.
But it wasn't sold as a store of value.
No, it never was.
Right.
In fact, we had persistent linear inflation when we
Right.
released it. But oil is still pretty valuable.
Yeah, no, but I'm saying that people's expectation about Ether, who are buying it, like, I'm going to buy crypto, I'm going to buy Ether, I'm going to buy Bitcoin, they're not really similar in terms of what you might expect as a bang for the buck. Because
Right.
Ether, there is, as you've described it, more of a sweet spot that's not too high.
Right.
Right? So
Yeah, and it's also interesting to point out in the Dow ruling that the SEC had, they actually called Ether a currency in the ruling, if you read it really, really carefully.
Oh, wow.
Yeah, go figure.
Okay, I think we have time for maybe one more question, and then we got to wrap it up.
Crypto show in the back.
Yeah, so we're talking about changing the Ethereum algorithm from mining to proof of stake. What happens then to the mining
So I missed the back half of the question.
Is Ethereum switching to proof of stake?
Yes.
instead of proof of work?
Well, Ethereum is, yes. They're moving to Casper, and they've been on that roadmap for now over a year and a half, I believe, or 2 years.
So where those miners go?
They'll go wherever it's most profitable to mine. If it's GPU centric, maybe they'll go to Zcash, maybe they go to ETC. You know, they'll make that decision on a facts and circumstance basis and a market dynamics basis. But I think Ethereum Classic will be pretty competitive for them to go to.
Okay, that's
That's it.
Thanks, everybody.